Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Scott Bauer. Hey there, Scott.
Jeff, how are you?
I'm doing great. Well, Scott, a lot to digest this week. Disappointing data last week out of the jobs number. Then we had Fed Chairman Powell come out on 60 Minutes with a pretty dovish interview. But what are you focused on this week, pal?
Let's take a look at these oil markets, continued China tariff talk, and lots of economic reports still to come out.
Well, let's dive into this first lightning round because there certainly is a lot to digest.
All right, let's do it.
Wandering WTI. Some news in the crude oil patch. Is that right, Scott?
Oh, yeah. Coming out of Saudi today, they said they're extending their cuts well into April. They have some meetings coming up. Let's see where that takes us.
Well, that's really interesting because domestically here at the end of the month of February, we saw the largest production on record. In the last 99 years, we are now producing 12.1 million barrels a day. So that is a tug of war with Saudi and their production cuts.
It sure is. And I think EIA came out and said, it's going to be 13 per barrels per day, before long.
That's a lot of oil. So how would you potentially embrace this range that we're currently stuck in, but also all the news about these production cuts?
Well, we're definitely trading up at the upper range that you had talked about. But what I'm looking to do is, as an example, take a look at this and sell a week 4, March 22nd expiration, 57.59 call spread in WTI crude oil. The spread will potentially allow an investor to collect $710.
I really like this, and you're utilizing this range to your favor. You're embracing it, and at the money, that's $57. We are seeing that May crude oil future, when this trade example was priced, at $56.92. So it's very close to that 57 strike level, correct?
Absolutely, and like you just said, that's what allows the investor to get more premium on this sale of this call spread.
That's right. Collect that insurance premium, no doubt about that. And we are seeing the at-the-money vol on this trade example at 27.35. All right, Scott, great stuff per usual. Remember, these are trade examples, not trade recommendations. Let's move into the second lightning round. The Fed. Well, we talked a little bit about it. We saw Fed Chairman Powell on 60 Minutes. It's big time. What are your thoughts this week as we're seeing the Fed continue to message the market?
Yeah, I mean, the continued dovish speak, and like you were just saying about it, almost seems like there's now the Powell put in the market.
Well, and the trade example I want to utilize is actually a put spread. I want to be a seller of a put spread. I know we're seeing the markets, the sentiment continue to shift, but striking at 2,700, that's a really interesting level. So I want to be a seller of the 2,700, 2,650 put spread in the E-mini S&P 500. The expiration on this is the EOM, end of month, March 29th. And this allows an investor to potentially collect $260, Scott.
No, that's great premium. And the June E-mini S&P 500 futures contract is trading at $27.75, and the at-the-money vol on this potential example here is 12.74.
We always talk about the how and the why, but the why is the fact that we see the Fed messaging continue to put wind in the sail of the markets. Therefore, a trade example like this would allow an investor to collect while the markets typically churn around this 2,750, 2,800 level.
Exactly correct. And even if, that we do go down a little bit further, not a problem here with this type of spread.
All right, Scott, great stuff. But before we close out today's show, I wanted to quickly talk about the launch of the CME Group's Micro E-mini Equity Futures. Really exciting news out of the CME Group for the retail accessible way to come into the futures contract. This is 1/10 the size. Is that right, Scott?
It is. And what this allows, Jeff, is the smaller contract will make global equity benchmarks much more accessible to the active trader.
So this 1/10 the size is allowing access to the E-mini S&P 500, the NASDAQ 100, the Russell 2000, and the Dow Jones. Is that right?
Spot on.
All right. Well, fun stuff for that retail investor. And please remember to join us every week as we will continue to strike options.